Hey everyone, my name is Ryan Becker. I'm the channel manager here at VersaPay. I want to thank everybody for joining this webinar today. We are going to focus on increasing efficiency and achieving ROI through accounts receivable automation. We'll give it 30 seconds here just to let everybody settle in. The last few attendees that are jumping on the line now and getting involved. I'll just pause here for a quick 15 seconds. Okay, so to start everything off, just want to do a couple housekeeping notes. If anybody has any questions, please use the console to ask those questions. We will be answering all questions at the end, so feel free as we're moving along. If anything pops into your mind that you want to ask at a later time, just feel free to write that, and we'll go from there. So just to give you guys a quick introduction on myself, I'm the senior manager of channel and alliances here. I work very closely with BAASS to bring our product to market and really educate everybody on an accounts receivable and the efficiencies that automation can bring and some of the ROIs that we can detail as well. I also have with me Sean Gracie, who is our solutions architect. We'll be working with Sean today as we kind of move into the later half of the demonstration. Sean will actually be driving us through the platform and talking through the nuances on how we can help you guys with your accounts receivable process. So based on the agenda, we'll give you a current introduction on the landscape of what we're seeing within the accounts receivable space. We'll talk about the automation and how that can support your ROI or your bottom line. We'll talk through some of the integrations and the technology and how that can increase efficiencies, and then we will again go into some product and open up to some questions and answers. So just to start off, really want to share a little bit about VersaPay itself. It's always great to know who's presenting as an organization. So VersaPay, we were founded in 2006. At the time, we specialized in B2B merchant service transactions, so running the rails for credit cards. In the last 4 years, we've actually pivoted as an organization based on the fact that we saw the way that business-to-business transactions were happening, and we wanted to create a better tool to help with the collections and the payment process. And so what we actually created was the ARC platform, which stands for Accounts Receivable Cloud, and that's what we'll talk about here in the later half of the demonstration. But a few things, we're publicly traded. So we are on the stock exchange. You can always take a look at us there. We do take a partnership role when it comes to our go-to-market strategy. This is why we've partnered with a leader like BAASS. And currently today, we have over 110,000 businesses on the platform which we deliver invoices to. And last but not least, really our mission as an organization is to drive a sea change in the way that companies manage their accounts receivable. So I think that's very important. So if we were to look at today's landscape, and I challenge you guys to think about your current processes today as we kind of go through this whole presentation is, what are you working through when it comes to your collections processes? Are you working on Excel spreadsheets? This is a very common thread when speaking with customers. And the reason behind why this can be so inefficient is, when you work on an Excel spreadsheet, the problem with it is that once you've stepped away from it, the data becomes stagnant. And within the matter of moments, if an invoice has been created or a payment has been made, that data is irrelevant or it's passed. When we think about how we manually work through a spreadsheet, we think about the tasks and assignments that we need to do, and there really is no automation driving activity for us. So when we think about efficiencies, there's really a lot of improvement that can be driven around that. Also, if we look at customer disputes, if we are tracking those, how are we tracking them today? We might have it in our ERP where we can put simple notes. We might have it on the Excel spreadsheet, but really, is there a better way that we can centralize this communication so that way at any given time someone can step into a platform or step into an area and understand what has transpired in in the collections process. I think these are all very valuable points that you guys should be thinking of as we go through the process. And really last but not least is the collections and follow-up process. Is this manual for you guys today? Are you guys constantly picking up the phone, sending out an email? And is there any automation driving those tasks so that way at the end of the day we can communicate in a more efficient manner with our customers? I think that's very important. And on the slide here, there's two statistics that really stand out to me. The first one is that 69% expect their organizations to begin a transition to electronic payments in the future. Really when we think about that, if we look at our day-to-day lives and our personal lives, we're really accustomed to using digitization and those type of methods for payment. If you think about paying your phone bill, paying your cable bill, even doing just banking. When was the last time you wrote a check? Chances are probably not fairly recently. So why are we doing this in our business-to-business transaction, in our corporate transactions? So if you look at the left side, this really is to describe the laggard organizations, the ones that may have not taken that step yet, or the organizations that are primed to take that step. And what we typically see are invoices that are being printed. When we talk about snail mail, you can think about the costs associated with stamp, envelope, printing, and even the personnel needed to package that. There's all the costs associated with that. So on average, you're looking at anywhere between 70 to 90 cents per envelope. If we were to move that to digitization and eliminate that hard cost, that cost is going to go directly to your bottom line. So, these are things, again, that you guys should be thinking about when thinking about AR automation and your ROI. As we move down the line, you start thinking about payments. Well, when you receive payments today through a traditional method such as a check, do you have remittance information on that, or is it a naked payment? How many times have you had to go back to the customer and ask them, what is this check for? I know there's multiple invoices on here, but I just don't know which ones. Think about the time and effort that it takes to do that. Once if there was a way to eliminate that, or maybe even have our customers do the cash application for us by selecting invoices through technology platforms, there is a way. And again, we need to think of that. Ultimately, as we kind of think of the inefficiencies, we start talking about our DSO and what does it cost to carry our capital. If we're out there carrying, a large portion of our cash flow, on credit, what if we could get our cash back in quicker, so that way we could fuel the growth of our business and eliminate the costs associated with that. Again, these are another area of concern and that should be explored. And last but not least, I kind of touched on it when I talked about the remittance, but cash application. We speak to customers all the time that are receiving, could be hundreds, maybe even thousands of checks a week, and trying to make sure that all systems align can be very, very tedious and painful. So again, let's empower our customers to help us with this by the use of technology. And again, these are all going to demonstrate areas of efficiency and add to your bottom line. So here's a quick infographic that I want to share with you guys. And this infographic is really to outline a lot of people's collections processes and the pain points that they experience with them. And in this maze, we hit roadblocks or we hit dead ends. And it really is around lost invoices, no visibility, human error, potentially unhappy customers, getting paid in a length that's not sustainable, and just the cost associated with it. For instance, a lost invoice. How many times have you, sent a customer an invoice and they said, well, I never received it? Using traditional methods such as, sending it through the mail or potentially sending it through your ERP, you don't actually have visibility into have they actually received that. So once if there was a way to give you back that control where you could understand if the customer had actually received their invoice and was maybe just not telling the truth, maybe they're using it as a stall tactic, how would that change the way that you communicate with your customer to help push payments forward? So what we want to do as an organization is really start to eliminate those barriers by giving you back control, giving you back visibility, reducing your costs, and overall getting you paid faster. And so these are kind of the things that I want you guys to open up your minds to as we go through the platform today. Here's another screenshot that I would like to kind of share with you guys. And this is a study done by PwC called the Working Capital Study. And basically what they've done is they've gone through certain verticals, or predominant verticals that we see, or larger verticals, I should say. And we looked at what does the average DSO look like, so days sales outstanding. So I would look internally and say, how do you guys rank up to these current standards or these averages? Are you above? Are you below? Or are you somewhere in the middle? If you're obviously above, is there room for improvement? And what can we do to improve that? And hopefully we can kind of assist you guys with that here today. As we talk about why you would want to automate, these are going to be some of the key areas that we see organizations want to automate. Using technology to help you get paid faster, on average, we see customers get paid 5 to 25 days faster, depending on the vertical and the health of your current aging brackets, using 50% less resources. So what does that mean? You can get paid faster with less cost associated with collecting your own capital. What could that do for the growth of your business, right? On the lower half, technology can also empower us to have a better connection with our customer, or maybe even differentiate ourselves from our competitors. And what I mean by that is if automation drove the tasks of 90% of our business because they were willing and wanting to pay, well, we provided them with a better tool, and it makes it easier to do business with us. But for those 10% that maybe, have difficulty paying or need a little bit more hand-holding to pay, it allows us to focus our attention on them. And in both of those scenarios, we've either provided a technology that's made it easy to do business with us, or provided a personal touch, which has made it easy to do business with us. And when you're in a commoditized market and, maybe you're selling widgets or distributing, some sort of product, what might separate us from our competitors could be fractions of dollars. So at the end of the day, sometimes it's not about the dollar associated with the widget or the item that you're moving. It's really about how you make them feel when you do business with them. So we really want to take that into consideration as we kind of look at technology to help us increase our efficiencies within AR. So that being said, kind of want to transition to our solution now and how we built this solution to help you with those core functions. The first one is really around invoice presentment. So as we talked about snail mail, sending it through your ERP, VersaPay, the ARC platform, will actually pull in all that open AR information and customer data, create that invoice within our platform, and present it to your customer. Without ever needing to create a password, your customer has the ability to click a link and with one click, see all their historic invoices in their platform and make payments right there on the spot. Really an easy way to interact and start to review that data. As we move into pillar number 2, it's really built around collaboration. Very similar to a LinkedIn functionality, we tokenize the emails that go out. So as the customer was responding to the email, they actually never need to log into the ARC platform to respond to that email. And what will happen is it will then be translated onto the customer report card. As we talked about aging reports and Excel spreadsheets, that type of information is not going to flow over. And the power of centralizing communication is key, because if someone was to step out of the office, anybody could step into that platform, see exactly what's happening, and then continue to move forward the payment process with very, very seamlessly. As we move into pillar number 3, it's around collections. I talked about visibility and control. Well, we want to give that back to you by using tokenized emails. We can see how our customers are interacting with our invoices and position the conversation accordingly to assist them in getting paid, and also give us the visibility into what action items do we need to follow up on next. Pillar number 4 is around payments. I constantly talk about wanting to get paid faster. So one of the key pillars to that is providing a better tool to allow the facilitation of payments. So our platform, what it actually allows for is ACH, EFT, and credit card payments, all PCI level 1 compliance, which will eliminate the burdens of certain segments of your organization and becoming PCI compliant and leaving yourself susceptible for potential fines if not. Number 5 is around cash application. As we mentioned before, as traditional methods of payment come in, you got to think ACH run or maybe even a check. Typically, there's a lot of human intervention involved in ensuring that all systems align. It could be getting a lockbox file from the bank, manipulating the data and uploading it into the ERP, or it could be potentially keystroking that information in. In a platform like ARC, we actually allow our customers to do our cash application for us, and it's intelligent enough that when they select the invoice, it closes it out within our platform, integrates it back into the ERP, and then from there closes it out within the ERP and deposits the funds in the settlement account. In that second scenario, we've eliminated all the need for human intervention and potential for human error. So again, if we think about increasing efficiencies and ROI, eliminating that day-to-day task and the potential for errors is definitely going to drive to your bottom line. And then last but not least, automation, insights, and analytics. So I'm going to focus on analytics in this part. And whether you're a collection agent and you want to see the analytics behind the accounts that you deal with, or maybe you're a controller or CFO and have multiple divisions you oversee, with quick filtering options, you have the ability to really sub-segment your business and focus on the areas of concern and really start to understand what your next steps are in collections and the health of it. And so these are very powerful tools that when combined will give you a complete invoice to cash process that will allow you to take back control of your collections. Last slide that I'll share before we transition over to the actual demonstration, and I kind of touched on it with the integrations point. So we seamlessly integrate into multiple ERPs using multiple methods, API, potentially file transfer, connection. Having data flow back and forth between the systems seamlessly will eliminate any friction or eliminate any potential for human error, as well as duplicate efforts. And as the theme of the broadcast today is reducing ROI or demonstrating an ROI and increasing efficiencies, this is going to be a direct correlation to that due to the fact that we're not duplicating our efforts to continue to ensure that all of our systems align. That being said, we are going to transition this over to Sean now. Sean's going to be able to walk us through the platform. As I mentioned earlier, if you guys have any questions on the first portion of the presentation or the actual demonstration itself, please use the console to ask those questions, and we'll review them at the end. Sean, whenever you're ready, please feel free to take the screen.
Okay, perfect. Just want to confirm you can see my screen?
Yeah, absolutely, Sean.
Okay, great. Hi, everyone. So what you're seeing on the screen right now is the two-portal representation that ARC provides. So on the left-hand side, there's a fully branded customer-facing portal. This is where your logo, your color schema, things like that would go up to create a consistent environment that your customers would log into that looks like any other portal or website that they might be using from your organization. This is ultimately where they're going to look at invoices, raise disputes, ask questions, and ultimately make payments. So we'll look at that for the second half of the demonstration. But to start, we're going to take a look at the collections or the supplier portal. So this is where your team would actually log in to get an overview of exactly where AR stands on a moment-to-moment, day-to-day basis. Your ERP or even multiple ERPs and CRM systems can all be tied into one portal where through a dashboard you can see an overview of where collections sits across the entire organization, including by your different business units, locations, whatever the case might be. However your GL is structured, you'd be able to filter down to see how those specific groups are doing. Really valuable to understand exactly where your DSO stands on a moment-to-moment basis. And since ARC is being updated constantly by any changes to your accounts receivable in your ERP, you'll always know dynamically exactly where your DSO or average days to pay stand on a day-to-day basis. Everything else is hyperlinked so that collectors can transition to areas of concern within collections as quickly as possible. Really, the idea of ARC is that it's not really a task-based collections tool, but you can react to things around collections as they come up. And that's due to the fact that ARC automates all the manual tasks behind collections with over 150 plus notifications that can be scheduled to go out at different cadences depending on who your customers are. Some customers maybe need more prodding, others maybe you want to communicate with a little bit less. You can control how frequently customers are contacted, especially once invoices maybe become overdue and hit those different aging buckets. Also includes things that are harder to track around collections, like a credit card number on file that's about to expire. It's really simple when you have an automated platform to just highlight that to your customers and really get ahead of things that typically push the payments and the collection cycle out even further. So collectors can instead stay focused on customers who can't or won't pay, or who need some kind of assistance where automation or AI isn't going to solve the issue for them. So as an example, as a collector, I might come into the Customers tab. I can have a filtered view that just shows customers I'm specifically responsible for if I'm part of a bigger collections team, or of course, just see everything across the board. And then I can filter my list down to really find those customers that need my assistance. So maybe I want to look at my 90-plus day overdue bucket and specifically highlight accounts that have warning flags of some kind. Warnings can be things like an email delivery issue if it bounces back, or a dispute or comment that's been raised on an invoice. And all of those issues are going to trigger an automatic notification to your collections team or account managers, whoever is responsible for following up with these customers. But they can also come into the platform and easily filter things down to really get a view into what they need to action today as a collector. Drilling down a little further, if we go into the customer profile, you can see that front-end dashboard view again, but now it's specific just for this one customer. So how have collections gone with them over time? Where is their DSO sitting today, and how is that trending? You can jump down to view a customer's different aging buckets to see exactly where they stand in AR. Again, everything is hyperlinked to quickly transition to different screens. Now I'm seeing a filtered view based on the criteria I selected on that customer profile, just the invoices that fall within the 30 to 60-day aging bucket. There's a lot of valuable information here. For instance, the delivery column shows a lot more than what you typically get with an ERP that maybe automates some of the collections process. So ARC isn't just sending out an email once an invoice gets posted, but also gives visibility into what happened to that invoice after it delivered to the customer. So did the email deliver successfully? Did the customer open it? Did the customer view it, which means that they actually clicked a link within the email and came into ARC? There's a few good benefits to having that information. One is, we're very upfront about our customer e-adoption rates. We have industry-leading adoption at just over 80%. And we're really upfront about it. So there's a lot of ways through the platform where you can see how customers are adopting the platform. Are your customers actually coming online? Are they viewing invoices? Are they making payments? And from a collection standpoint, it brings in that additional context that you typically don't get in delivering invoices. So before you even pick up the phone and talk to the customer, you can find out whether or not the customer is aware of the invoice. Have they looked at it? If you notice that none of their invoices are ever opened, is it a question of maybe having the wrong email address on file? All things that you now have context for in using a platform like ARC. Some other detail I can see on this screen. Although this invoice is overdue, as a collector, I wouldn't be concerned about it because I can see that the customer's actually scheduled it for payment. You'll see that through the customer portal as well, but also in this collections portal, customers can opt in for automatic payments, automatic debit, or even just scheduling a payment for a specific day. And you'll have full visibility to that in just a few clicks. You can see all scheduled payments that are in the system to better understand your cash on hand situation through different times of the month. Finally, I noticed that this invoice has a dispute on it, so maybe I want to look at it to get some additional context. The invoice templates are, again, fully branded. We can either ingest the PDF invoices that you're already producing and present those through ARC, while linking back to valid metadata from your ERP, like the invoice number, the total due, the due date, things like that. We could also rebuild the templates right within ARC, pulling in the data from your ERP so that all the fields populate and present accordingly to your customers. If I scroll to the bottom here, I can see the dispute that the customer raised. And there's a few different ways that I can action this as a collector. As soon as the customer raises a dispute, it sends an email notification to your collectors. And they can choose to respond directly to that email right in their inbox. All the back and forth that happens between the customer and the collector is going to appear within ARC, just below the invoice, even though it's not happening in ARC. You can think of it like LinkedIn. You don't have to log in order to respond to someone's message. ARC behaves the same way with its tokenized notifications in order to capture all of that data. What that means is no longer are conversations between the collector and the customer vaulted in that collector's inbox. Now it's in one place where really any of your team in finance or collections can go in and get a view into what kind of collaboration is happening with this customer. Has anyone responded to them? Is there any further clarification required? You can also respond right within the app. You can choose to maybe make a shared comment, let the customer know that we're looking into the situation and hope to have a response soon. But maybe there's a need for some internal dialogue. You can hail a specific person in your organization and raise a question or ask them to look into it. Can you check this customer's contract or confirm in the price book or whatever the case might be? Conversation that you wouldn't necessarily want the customer to see, but still you have this centralized location where all this information, both internal and external, can be shared with your entire organization around collections. Now maybe you get on the phone with the customer, explain the situation, and they say, okay, everything sounds good. I'd like to pay that invoice. Can you take my credit card over the phone? Or can you use my credit card on file to process that payment for me? Well, the collector now has a PCI compliant environment where they can process a payment on behalf of your customers. Maybe they're entering new data. Maybe they're using an existing bank account or credit card on file. They can put in the actual amount, choose to have that pay right away, or if the customer was making a promise to pay, you can pitch it now as which funding source or credit card would you like to use to back up that promise to pay. A promise to pay just became a guarantee to pay. There's no chance that the customer is going to forget about this or anything like that, as it's automatically going to be debited. It's not going to push out the collection cycle even further and trying to reach out to that customer to try and get them to actually make that payment on the requested day. Now it's all automated. So we'll just take a few steps back, look at the customer's profile here, just before we jump into the actual customer experience. One thing to highlight is, of course, from your ERP, we're going to pull in the bill to or the primary contact on any customer and start the conversation with them that way. Of course, you have the ability to add additional contacts to that customer right through the platform, or it can be through an integration to the ERP. And of course, the customer also has the ability to add additional users. Really, the idea here is the more eyes that are on invoices, the higher the likelihood that disputes and questions are going to be raised early, solved early, and that ultimately payments are going to come through on invoices faster as well. Below that, there's the concept of the internal team. So this would be members of your organization who should be highlighted for any activity that this customer is having on the platform, any issues around payment or any disputes that are being raised. Again, having more than just collections involved, maybe customer success or even the account manager or someone like that, is beneficial, creates a better customer experience, because rather than someone who's calling and asking for money, reaching out, you're talking about people who have a relationship with the customer, who are engaging with them and responding to disputes or issues that they have. ultimately we know that the first indication that there might be an issue between a customer and an organization is an unpaid invoice. Below that, there's a full audit trail of really all engagements that the customer is having with the platform. So anytime an invoice is being issued, payments being made, dispute or comments being raised, or even a login, all that data is tracked within the system and is available for export out of the collections portal. So we're just going to transition now into the customer-facing portal so that you can see what the customer experience is like within ARC. So again, it would be a fully branded portal. Your logo, color schema, splash picture, things would go up here. So again, it becomes a consistent experience to what your customers are already used to in working with you online. But before a customer ever sees a login screen, if they ever see one, the story for them really starts in their inbox. This is where they're going to start receiving notifications that you've scheduled to go out of ARC or statements and things of that nature. They'll have a branded email with some basic information around the invoice itself. And even if the customer has never logged in before, with one click, they can view their invoice, they can view a dynamic statement of all their open AR, or they can even jump right to making a payment. Again, all without having an account. This is due to the tokenized express user experience that ARC provides. That tokenization allows for a secure bridge into the platform where the customer can view invoices, engage with your team by asking questions or raising disputes, even get as far as making a payment before they're ever asked to create a password. They'll go in to add a bank account or a credit card, and the system will ask them if they want to make a one-time payment, sort of like shopping as a guest on Amazon or something like that. You don't need to have an account. Or entering a password so that the credit card or bank account information can stay on file for future use. This benefits really two groups of customers. There's the one group who are being billed one-off or only get billed annually or quarterly, who never sign up for portals like this one. By giving them an express experience where they can jump right in, make a payment, and not have to actually create an account or a login, they see the benefit of doing business with you, in that they'll actually change from whatever old way they were doing things, maybe sending a check or something like that, and instead use this platform to make that one-time payment and walk away. But you've just given them a better customer experience, which might drive them to you again in the future overall. In addition to that, there's the rest of your customers who maybe are being billed more consistently. They're having an opportunity to really see the value of the platform. And by the time they get asked to create a password to potentially use their credit card or bank account another time, they're already thinking about next month when they're going to have to make another payment to you and to your organization. So they secure it with a password and move on from there. That's one of the reasons why we do have industry-leading adoption to the platform. Of course, things like SSO can be utilized if you already have a customer portal of some kind, where clicking a link within that portal can bring them right to their invoices to make payments and things of that nature. So never even putting that login or password scenario in front of them. Once they're in and making payments, you can then control how you want to receive payments. So which credit cards do you accept? Do you always accept credit cards? Do only certain customers have the privilege of using credit cards? Is there a minimum or maximum threshold on credit card payments? Are you passing the convenience fee on to your customer, or are you absorbing that yourself? All of that can be configured within the system based on whatever kind of strategy or approach you want to take to receiving payments digitally. Additionally, you can incentivize customers to come into the platform and pay early by giving them a time limit as to when they can use their credit cards. This is a great way to sort of offset that additional fee of accepting credit cards by reducing DSO, by really encouraging customers to get in and make payments. They see it as an incentive or an offer. Additionally, customers can choose exactly when they want that payment to go through. So is it paying immediately? Are they on terms? Do they want to pay it on the due date? Or do they want to schedule a specific day? Maybe they pay all of their vendors on the 15th or something like that. Whatever their preference, they have the ability within the platform to do that. And of course, you have visibility into all scheduled payments within the system. Additionally, customers can make short payments on invoices. If they do so, they're required to enter one of your dispute codes or one of your reason codes. Of course, there are going to be scenarios where maybe they want to break the payment up over different payment sources. That's totally fine. Maybe they are raising a dispute. If your team needs to be notified or actioned, of course, that's something that we want to make them aware of. So they'll receive a notification right away saying that a short payment was made and this dispute was raised, so that they can take whatever action necessary in order to recoup that payment. Additionally, customers have the ability to opt in for auto pay. So maybe if they are being billed on a monthly basis and it's roughly the same amount every time, they can choose a funding source, they can choose what day they want that to process on. They can even set a maximum threshold. So if their monthly bill is roughly $5,000, they can enter that information, and then if it ever goes above that due to overages or additional service or anything like that, they'd have the ability to go into the platform, look at the invoice, maybe raise a dispute or ask a question, or ultimately approve that payment maybe on a different funding source. Customers can also make prepayments, so maybe if they're having credit issues or something like that, they can make a payment before an invoice is even issued, where they can put in an amount, choose a funding source, and leave some remittance information so that ART can easily tag it at a future date when that invoice actually does come in and send back to the ERP. For all payments that are made in the system, that data is going to be pushed back to your ERP or different ERPs to 100% automate the cash application process. Ryan mentioned it in his intro, but it is like passing the cash application on to your customers themselves. They're saying which invoices they're paying, how much they're paying, and we can send that information back to your ERP to close the AR or show the remaining balance if it was a short payment. Jumping to the main invoices screen, customers can see again a dynamic look at all of their open AR and can also look at historic payments that they've made in invoices that have been issued to them in the past. They can see, of course, all scheduled payments. They can select multiple invoices to be paid all at once, just kind of like a shopping cart online, and can handle any other potential uses that they might have, like exporting all of their AR in a CSV file so that they can upload it in another system or pass it along to someone else for approval. Sort of the final thing to speak about from an ART perspective is just the way that customers like to access portals like these. We started receiving a lot of pushes from mobile devices, and so a lot of our customers were bringing up a desktop version of the website on their phone to make payments. We realized we needed to have a better solution for them, and rather than creating an app that they would need to download from a store and sign up for, we wanted that same instant access that they have on the web. So customers can click on an invoice from their email, be able to jump right in to the website on their phone. Again, select multiple invoices, look at all their open AR. They can get a basic overview of what's on the invoice or download a PDF to their phone. They can make a payment through an existing payment method or by adding one. Choose to schedule a payment, short pay, raise disputes, and everything else that you saw on the web. Really, the goal here is to present invoices to your customers and provide as few clicks or pushes as necessary between the customer actually receiving that invoice and making a payment ultimately. So make it as simple as possible for the customer, give them whatever their preference is in terms of how they want to access that information on the go or in front of their desk at work, and leave you in control of how you accept payments from those customers, while giving a centralized portal for both your team and for your customers to view any comments or collaboration that's taking place. So that's a high-level overview of the platform. I'm going to stop my share and pass things back to Ryan to wrap up today.
Thank you, Sean. I'm just going to share my screen, Sean. Will you confirm that you can see it?
Yep, can see your screen.
Perfect. Guys, so I want to thank everybody for paying attention to this here. At this point in time, I really wanted to open everything up to kind of a discussion. Marcel, I believe, has been monitoring the questions that have been coming in. So at this point in time, we'll probably pause for a moment to see if anything else comes in and then answer your guys' questions. Marcel, do we have any questions that have come in?
Yes, sorry about that. So there's a couple of questions that came in. First one is, what type of adoption numbers do you see for the customer portal?
Yeah, no, that's a great and fair question. As Sean alluded to, aggregated across our entire business, we actually see an 80% adoption rate, and that is an e-adoption rate. So e-adoption means that they're actually going onto the customer portal and reviewing their invoices online. Of that 80%, we actually see 40% of those make payments online, and so use ACH, EFT, or credit card to close out their invoice. To dig a little deeper on that question, the reason that we have industry-leading standards, there's a couple of factors that are involved. One is the automation engine that powers the communication to the customer so that way they're always receiving updated notifications, but it's also the link, the tokenization, and the express user login. If you think about the workflow of an accounts payable personnel, the last thing they want to do is create a password to make a payment happen. And as Sean had guided us through, you can very easily make a payment without ever having to create a login. So that's one of the reasons why we're a leader. The second reason why is due to our customer success management team and our rollout strategy. So when you onboard with ARC, we put together a program which we call Spark. Spark is really a program that is more of a marketing program that we work directly with the customer to either educate and train their customers on the platform that's coming to them. So we can either incentivize them, we can tell them all about the benefits and the features, and there's really two approaches. There's a stick approach and a carrot approach. The carrot approach is, again, the incentivification, where stick is, hey guys, listen, this is the way that we're doing business moving forward, and if you want to continue to do business with us, you use this platform. But again, a customer success manager will be with you to unroll that strategy out and help you continue to increase adoption over the course of your time with VersaPay.
Okay, great. And the second question was, on credit cards, what type of controls can you put on the acceptance of them?
Yeah, that's another fair question. So a lot of the organizations that we work with today, may not necessarily accept credit cards, and there's typically reasons behind that. It could be the fees associated with merchant fees. It could be the fact that it's not built into their contracts. And what we've actually done in our platform is given them, the customer, the ability to really build out a corporate policy and control the way that they accept credit cards. For instance, we can put thresholds on credit cards. If you're willing to accept a payment up to $5,000 on credit card, we can build that into the rule. And so when a bill hits $5,001, we will remove the ability to make that a payment happen. We have the ability to pay by certain segments of customers, as I alluded to in my last statement. You may have certain customers that are on terms that allow for credit cards and other ones that don't. Well, we can start sub-segmenting your business on basically the functionality of credit card and limiting who and what customers can do it. Another common rule that we see is the offer rule, where what we call weaponize our credit card by saying, maybe our terms are 30 days, but I'm willing to let you pay by credit card if you pay me in the next 10 days. So in that scenario, what we've done is actually decreased our DSO by 20 full days due to the fact that, minimum 20 days due to the fact that if you pay by credit card, you have to pay within this time frame. And then the last scenario that I'll share with you guys, and which is an extremely common one, is parlaying those credit card convenience fees to the customer. There are legalities behind it based on jurisdictions and regions, but our platform can conform to those, and we can up to 3% actually parlay that fee onto them. You can split it, you can do up to 3%, you can do a flat fee. Really, we can help define what that looks like, but ultimately there's a quite robust functionality around credit cards and how we can support you guys in the corporate policy world.
Okay, great. Thank you. I think that's it for, unless there are any other questions. So thank you very much, Ryan and Sean. And again, this session has been recorded and will be circulated. So thanks again, and everyone enjoy your long weekend.
Thanks, Marcel and the BAASS team and everybody who joined.